Hey, what's up, guys? I hope you're doing okay. We just saw the largest liquidation event in crypto history in the last few days. We can see this huge wick down on the others market cap, and it's quite a big wick down that liquidated a lot of leveraged positions. So if you were trading perps at that time, especially if you were using cross margin and you're trading different lower cap altcoins, some of the altcoins like Atom even went to zero. So it was a huge flush down, and this post that I shared in the Drippy Finance Discord is basically what happened. Someone was exploiting the way Binance valued the collateral assets. There was not a lot of liquidity for USDE on Binance, along with wrap Binance ETH or the Binance Sol as well. So they dumped these tokens and the USDE on Binance depegged all the way to around like zero point 0.6, I believe. So that caused a lot of liquidation on the platform, which caused a lot of forced selling. And that liquidation kind of spread out throughout the crypto market, right? Even on Hyperliquid, there were a lot of positions that got liquidated, and we did see some bounce in the market, but it was quite a big liquidation event. So maybe there's some fallout that would come in the next few weeks. We'll have to wait and see. And I'm not completely sure if we're actually going to do like a V-shaped recovery or not. But some major altcoins like Ethereum is less affected. You can see Ethereum did wick down to around 3,400, but it's not like a crazy wick down to like 2,000 or $1,000 or something, right? But if you guys were using the smaller layer ones as collateral assets for different strategies like the pool lever strategy, where you lend out crypto assets and then you borrow USD against it, you would have been liquidated as well, right? Stuff like AVAX, SUI, you see a huge wick down from $30 all the way to sub $10. So even if you had a minus 50% liquidation point, you would still be liquidated and you wouldn't have had the time to react, right? Same thing with SUI. It dumps down to liquidate. So you can't really buy back in either if the recovery is super fast and you weren't around to access your funds. So it was a really bad situation if you were levered up on these assets. Even stuff like Hype would wick down from $43 to about $22. And the timing of everything is pretty odd, in my opinion. Trump was mentioning that he's doing a 100% tariff on China in response to China controlling the exports for rare earth materials. So all of it was pretty suspicious. And we did see a lot of shorts being opened on different perps platform before the big flush down, right? But the major assets like Bitcoin and Ethereum still looks fine, in my opinion, until we see a larger breakdown. So it was a pretty bad situation. If you lost money from that, I'm very sorry to hear. It's very unfortunate, and it's more of a black swan event that could happen to any of us. And in the rest of the video, I will cover how I recover from the large losses, what I personally do to protect my wealth, and how to use leverage in a safer way so that you don't get liquidated if you plan to use leverage in the future. And of course, with leverage, there's always risk involved. And if you're new here, my name is Richard. I'm a DeFi investor and a yield farmer. So thankfully, I wasn't exposed to leverage, and a lot of our community members did not really get liquidated as well. So that's good news. But if you did suffer a big loss, I do want to share a few things that have helped me in the past. Hopefully it helps you. And I'm not saying that I know your exact situation. I know it's a very hard time if you just made a big loss. But here are a few things that have helped me. Hopefully it helps you as well. The first thing to do is to just log off for a while. Don't look at the charts. Don't worry about the market. If you've been watching my videos pretty regularly, you know that a few weeks back, I suffered a pretty large loss from a social engineering scam. I lost about like 74 or 76K. So that's a pretty big loss for me, but I focus on just logging off, not thinking too much about like the losses, and focus on other things that have been happening in my life, right? And the second thing that I encourage you guys to do, if you suffer a big loss, either from a bad trade or from black swan events like this, or from different hacks and scam, is to talk to your friends and family. It's very helpful if you guys are in crypto that you have a good support system in place. so that you don't make really bad decisions if something bad happens to you, right? That's why I'm into NFTs and I'm currently building a DeFi community as well. We could come together when bad things happen so that we could actually help each other out, right? And if you guys suffered a huge loss from the bad event, I'm more than happy to talk to you. If you need someone to talk to, just send me a DM on X. I'll get back to you as soon as I can. But talking to friends and family really helped me out in difficult times. It allows me to actually connect with people I care about. Maybe if you guys have been super focused on making money, sometimes our relationships kind of take a backseat, right? So it's a good time to log off, just connect to your friends and family, talk to a therapist if you can afford it. I believe therapy is a really good thing. I spent some money going to therapy after suffering a huge loss. And I believe that it really helps with like processing your thoughts and emotions, and a lot of these pain are temporary, right? We've unfortunately seen like some cases where people would make permanent solutions to like a temporary problem. I generally hope that if you actually suffered a big loss, that you find some sort of support and talk to some other people before you actually get too deep in your head. And it's going to be really hard to dig yourself out of a bad mental space. And if you could survive like the next few weeks, I promise you things will get better. And if it's only a partial loss on your portfolio, I would encourage you guys to actually take some time off just because we want to avoid tilt when it comes to actually making good investment decisions. When emotions are running high, when there's a lot of fear in the market, maybe you suffered a ton of losses. It's very tempting to like move on to the next play and bounce back from your losses, right? But in my opinion, what has helped me is actually calming down and reanalyzing my portfolio, spend a week or two not thinking too much about crypto, and then give myself like the time to actually rest up, get into a more level-headed space before making any investment decisions. This is especially true if you guys are fully into crypto with your net worth. I definitely do not recommend most people to put all of your eggs into crypto precisely because of things like this, right? Was it possible to actually predict this black swan event? I would argue that most people would not see that coming. You would think that using a 1.2 or 1.3x leverage on most tokens, especially when they're like the larger cap altcoins, are reasonably safe, right? But in this scenario, you would have been wrecked even with like a 1.2, 1.3x leverage. And a lot of the stop losses actually did not trigger. So we never actually know like exactly what happened. If you recently suffered a big loss, we don't want to roll those emotions into our next decisions because it could affect the quality of our decision. And a mindset that have helped me in the past is that I could always make more money in the future. Sometimes the losses are huge, right? Like 50% of your portfolio or more. But if you think that, okay, this is the end for you, like you lost everything, you can't make it back, then you're going to be in a very negative headspace, right? And again, I'm not telling you what to do if you've recently suffered a big loss. I know it's a huge deal. Your finances are definitely going to be affected, your quality of life, your stress, your mental health. I'm just saying I have been in similar situations before. I've been really sick in the past, lost a ton of things that I've worked hard for. And I believe that these things do help most people out. Even if you haven't suffered a big loss before in crypto, a lot of times you will if you stick around long enough. So hopefully you keep these few things in mind so that you could bounce back stronger from these painful lessons. But as an investment consultant, I have worked with a bunch of different portfolios and a bunch of different portfolio sizes. So I want to share a little bit about how to protect your wealth so that you don't lose a big portion of your portfolio. If you guys look at the math behind like the losses and stuff like that, it is going to be more challenging to make all of your money back. Let's say you start with like 100K, right? And then you suffered a 50% loss. Your portfolio is down to 50K. For your 50K to go back to 100K, you would actually need a 100% gain, right? So it's a minus 50%, but then you need to plus 100% to make it back. So that's why I believe that wealth protection is actually quite important if you guys are into crypto. We can make a lot of money sometimes fairly quickly, but we can also lose a lot of money fairly quickly as well. So that's something to really think about. But the first thing that we could do to protect our wealth is to actually level up our skills. The more skills you have, the more ability you have to provide value to other people, then you could turn those skills into money, right? If you have enough skills on your hand, enough knowledge on your hand, it's going to make it much easier to make money, even if you lost everything in like a bad investment or a black swan event. I've seen stories of a ton of investors that are into crypto. They lost all of their money, but they were able to make it all back because of the skills that they have developed along the way. And then they keep working hard, even if they are zeroed out, right? So one thing to realize is that even if your portfolio value goes to zero, even if my portfolio goes to zero, I am confident that I could slowly work it back up if I build the skills necessary to do so, right? So if you guys don't have the skills and you only have the money, it's going to be very hard to like retain that money, especially if you are like 100% into crypto. Which kind of brings me to my next point is that most people would benefit from diversifying across other asset classes. So what do I mean by asset classes? We're talking about stocks, right? Gold, real estate, all of those stuff is going to actually protect your portfolio. If you guys are 100% into altcoins or meme coins, for example, then you would have suffered like a 80, 90% drawdown on your portfolio by now because memes have been really weak this year, right? So having like other asset classes, especially if you guys are more active investors, could definitely help like give you that buffer and that safety to actually make good decisions. Some people say like, okay, just go all in into crypto. In my opinion, that sounds like really good. But in practice, most people would actually fail at like going all in into crypto. The reason why is it's not very easy to do, to control your emotions, to make good investment decisions, and to actually make a profit over time in the market, especially if a black swan event could wipe out some of your strategies, right? If you guys are running heavily leveraged strategies, that dump would have been enough to wipe out a big portion of your portfolio. That's why I always recommend my clients and in the classes that I teach that the way to actually protect wealth long term is to diversify into other asset classes. And I'm not telling you guys to be like an active investor in like different markets. For stocks, you could be buying like the S&P 500, right? And just keep things very simple. Buy an index fund. You could do like the auto DCA strategy and just buy and hold, right? If you guys are a more active investor into the crypto market. And I've seen it time and time again, guys, that people lose all their crypto holdings either through like over leveraging, scams, hacks, like bad investments. There's just a lot of ways that you can lose money in crypto. And if you don't want to be zeroed out, then you want to allocate a portion of your portfolio into other asset classes, right? And if you guys hit it big in crypto, what I also like to do as well is that when I take profits, I move some of the profits into like the lower risk assets like the S&P 500, into gold, into some like real estate or into like REITs, right? What we have to realize is that the crypto industry is still like very new compared to what exists. And it's just a very small market. It's a rapidly evolving market. It's a very high risk market. Anyone that says like crypto is low risk is not really like telling you the truth, right? And if you are not comfortable with losing everything you have, then you definitely want to think about like diversifying across asset classes. And this is especially true if you guys have a larger portfolio. If you are working with like 6 or 7 figures and you don't own any stocks, gold, or real estate at all, then you're at a very high risk of actually losing all of your assets. And it could just be that you click on the wrong buttons or got to know the wrong people that scammed you out of your assets, right? So this is very important the larger your portfolio is. And you could argue that if your portfolio is very small, like let's say 10K or less, then diversifying might not be very important, right? Because like even if you take a 50% drawdown of a 10K portfolio, that's only a 5 grand loss compared to like, let's say you have $1 million. Taking a 50% drawdown is actually a 500K drawdown, right? And if you're not comfortable with like managing your emotions and you can't see your portfolio getting cut in half in like a couple of weeks or a couple of months, and you should definitely not be like 100% into crypto with your investment. So that's something to really consider. And lastly, never invest money you can't lose. Even in the S&P 500, guys, if you guys cannot withstand a 50% drawdown on your capital, which sometimes it does happen if you look at the history, like the dot-com bubble, or if you look at the 2008, 2009 housing crisis, right? The stock market does draw down by like 50% from time to time. So we definitely don't want to invest money that we can't lose. Investments always pose a risk, and that's why you're getting paid like the risk premium rather than like the steady 4 to 5% return per year, right? So never invest money that you cannot lose. And the safest way again is to just do all of these things to level up your skills, diversify across asset classes, and realize that a lot of the crypto investing risk is very real. Don't downplay the risk. We are actually investing in a high risk industry, except for maybe stuff like Bitcoin and Ethereum that is very likely to stick around for the next decade or so. But even then, I would highly actually consider twice if you want to put like 100% of your net worth into stuff like Bitcoin and Ethereum, right? Simply because the drawdown could be insanely high and you could benefit from some diversification. And before I hop off here, I do want to share a few things if you guys want to run leverage strategies to hopefully keep you safe when you do so. The first is to never fully leverage your portfolio. Let's say you guys have a 100K portfolio. You definitely don't want to like deposit 100K into Aave and then borrow like 40K against that, right? Because there's a lot of hidden risks like the smart contract risk, or if there's a really huge drawdown in the market and you're not able to repay the loan, then you're actually going to be liquidated and lose a lot of money in the process. And the second thing is you want to have a diverse basket of high liquidity assets like Wrap Bitcoin, Coinbase Bitcoin, or Wrap ETH, or even Wrap Stake ETH. If you guys are doing lending and borrowing on Aave, that's because if you only use one collateral assets, like in the case of USDE on Binance, if the liquidity is low enough and people are dumping those assets, then it could trigger a liquidation if the asset depegs, right? So if you guys are running leverage strategies, it's typically good to have like multiple assets that are used as a collateral. And you want to double check how these lending platforms value collateral assets as well. Some lending platforms have different ways of like triggering liquidation. If it's like an average price or if they're using the price feed from like other liquidity sources, you want to look into that and not just deposit blindly into lending and borrowing protocols, right? And we definitely don't want to be leveraged up on like the lower cap layer ones like AVAX, SUI, Hype, or even Sol. If you guys are only using that as the single collateral asset, maybe on like the native platform, if you're doing like SUI, you're leveraging on like SUI land or something, and then you're taking out like 30, 40% LTV. If a big liquidation event like what we saw happens, you're going to be very easily liquidated, right? Because a lot of these layer ones do have much less liquidity compared to stuff like Wrap Bitcoin or Ethereum. I personally would not be leveraging up on like these assets like Hype or Sol, and you could already make a ton of money in the crypto market without leverage, right? Realize that when you guys are interacting with leverage, there's always risk involved. You never actually know what's going to really happen until like stuff like this happens in the market, right? You want to diversify into different strategies as well. For example, if you guys are lending stable coins, you could do it on different platforms. And if you're running like an altcoin accumulation strategy that I teach you and I often share on my YouTube channel, you want to be running these in combination with other strategies like the blue chip crypto to stable pools or just a simple buy and hold strategy, right? It's always good to hold some like raw Bitcoin without any custodian risk because if you're using Wrap Bitcoin or even Coinbase Bitcoin, there's always that custodian risk there as well, right? And we want to make sure that we diversify into other asset classes just in case that there's a lot of risk that we did not see coming, especially if the stock market crashes. I believe that crypto would crash even harder especially altcoins. So it's very important that if you want to protect your portfolio for the long term and actually build long-term wealth, we want to be diversifying into other asset classes. And in my opinion, you can go all in into crypto if you want to. I do have like a pretty big chunk of my portfolio into crypto, but just know that crypto is a higher risk industry. It is a newer industry. Things are changing all the time. Technology is evolving. So there's a lot of risk that is associated. That's why we have a potentially higher rewards when we're investing into these assets, because there's a lot of risk that is attached to it. So I hope that was helpful, guys. I personally did not add to my holdings in that dip simply because I'm already pretty heavily exposed to crypto assets. But if I do see assets like Ethereum going below $3,000 or Bitcoin going below 100K, then I would potentially be buying more heavily into these assets, or Solana dropping to like $100 to $150 zone. Then I'm a buyer at that point. For the major tokens, we didn't really see like a huge drawdown. So I'm still watching for buying opportunities. And that's typically what I like to do. If there's a big drawdown in the market, we want to be looking to be a buyer rather than a seller, right? And if the market does go up and recover in a V-shaped recovery, then I want to be looking for selling opportunities rather than buying opportunities. So that's kind of how I manage my investment portfolio. Hopefully that liquidation event is behind us and we don't see large losses in the market again. But it's very hard to tell. That's why I always recommend, diversifying across different strategies, or at the very least, not investing the money that you can't lose into crypto. So hopefully you did not get caught in the dump that we saw a couple of days back. And even if you did, I hope that this experience makes you stronger and that we could all make more money in the future as long as we stick to crypto, stick to sound investing principles and strategies, and that we don't over leverage our positions at any given time. And if you want to learn more about yield farming and DeFi, feel free to check out the link in the description. I do have a pretty comprehensive course on yield farming and the community that you could join. So if you need more support with yield farming and DeFi, that's the best way to do it. Thank you once again for watching. I'll catch you next time.